Hi, and welcome to another edition of TraderCast's Daily Market Report. We're currently looking at the multiple time frame analysis for euro-dollar currency pair. This is our daily, 4-hourly, hourly, and 15-minute time frame. So our daily appears to be quite bearish. Price is making lower lows and lower highs. It's clearly intact by this falling, below this falling 20 and 50 period moving averages, and also 200 period moving average here. So our 50 period moving average is at 27.78. Our 20 is at 27.12700 on the daily time frame. So 4-hourly appears to be even more telling. This big massive red candle here is post FOMC statement, price action, spike in dollar index or dollar strength because of their hawkish statements, and obviously massive weakness in euro. We were looking at these kind of resistance levels in the past, and we have 20 and 50 period moving average around here, 26.80, quite a significant resistance at the moment. So our hourly time frame appears to be confirming the same reading as well. Oversold bounce back of 25.60 level. We are currently at 26.13. Our 50 period is at 26.71 and 200 period is at 26.95, call it 27. And our 15-minute time frame appears to be referring to this 27.72 as the logical resistance area. So these are just simple moving averages and a basic price action. Let's go into the actual chart and look into the kind of greater detail. A 15-minute time frame with rising trend line, support. We were talking about this 2660, 2680 as logical support areas, and we were looking for a potential loss of that in order for price to move lower. Instead, it was just bouncing off that slightly higher and coiling up until FOMC statement at 6 o'clock on Wednesday, because you'll be watching this probably on Friday. And then subsequently a massive selling pressure, which came down to here 25.60 and found some support. So the levels that I'm keeping an eye on are fairly straightforward. Apart from these moving averages, we can apply a basic fib. So we have a current support at 26.13, 26.00 would be obvious support as well. A loss of this 126.00 level, 26, could potentially target 25.60, 25.40 very quickly. Only a confirmed loss of 25.40 and maybe 15-minute candle or hourly candle closing below this level, and obvious dollar strength manifested in dollar index could potentially target 25, even 12500. Alternatively, if the price stays where it is, the initial resistance is at 26.32, followed by 26.49, followed by 26.59. 26.59 is our 50% fib retracement from this high to this low, but it's also referring to this cluster of the lows here. Breakout higher would potentially target 26.80, which is this low here as well, and those two levels, 50 and 61.8 fib retracement, would probably be seen as a logical resistance area when most of the bearish players might re-enter the market and potentially look to short again. So either a loss of these levels lower, or maybe a rally into these levels and then potential kind of shorting opportunities. The bearish bias is still intact, and longer term time frames are still in a clearly defined downtrend.